Hello and welcome to our update on 4D infrastructure. My name's Jonas Daly, Head of Wholesale Sales at Bennelong Funds Management. As far as the process goes, how do you think you're different there?
Yeah, look, I think there's a couple of things that differentiate us from our peers, and that is one, and I think probably the biggest one for us is that macro for us is not just an overlay. It's integral to our process, and we assess countries, their macro, fiscal, political position, just as we would a company. So basically, countries for us and the assessment of the macro outlook for those countries is just as important for us as the company analysis. So that's a big differentiator for us, and that is integral throughout our entire process. Secondly, I think we basically are index agnostic, so we are looking for the best opportunities globally, not the relatively best. So we aren't driven by what an index is telling us we should be owned, we're just finding what we think are the best combination of quality and value on a global basis. And I think finally, just in terms of valuing a company, we do assess quality and value separately, so we can actually find the best combination of those two when we're looking to invest our portfolio. And to that end, our valuation is a three-pronged approach to valuation, so we don't ignore what the market is telling us. And I think it's these factors, as well as our global coverage, that really differentiate our process from some of our peers.
Okay, great. And also, obviously, you're unhedged as well. And you mentioned being index agnostic, but Greg, what's your thoughts on there, and just what's the reasoning behind that structure?
Well, that's right. It relates back to the principle, our philosophy of investment, which we touched on a little bit earlier, and that's simply to find the best stocks globally for the fund, and just be focused on stock selection and finding the best opportunities, and be less concerned with indexes. As Sarah said, we don't want to find the best relative stock, we want to find the best absolute stock. And similarly for FX hedging, we just believe that the goal of the fund is to find the best opportunities globally and have them in the fund in the purest form.
So Sarah, in regards to benchmark, what are you currently looking at?
Yes, we're looking at an inflation-adjusted benchmark. So we're looking at G7 inflation plus 5.5%, which should actually generate our investors an annual return of 8 to 9%. Inflation is incredibly important for infrastructure assets, so we think this is an appropriate basis for the benchmark that we're looking for.
And Greg, just as far as coverage go, what kind of regions and countries do you invest into, and how do you share that across the investment team?
Okay, so we divide the world into 4 regions. So North America, Europe, developed Asia and emerging markets, and we cover all those equally with an analyst responsible for at least one of those regions. And the reason we cover all 4 regions is we again, it goes back to our investment thesis, that we're looking to find the best opportunities globally wherever those assets may lay. Now, overlaying that is, as Sarah touched on earlier, our country review process. So there's a very defined process by which we approve countries for investment. So the stocks need to be in acceptable or approved jurisdictions to start with. But after that, we do cover the 4 corners of the globe, and we believe that is a unique feature or an attractive feature of our fund, that we do offer that sort of exposure to investors.
Okay, great. And what are some of the key investment themes that you're basing your portfolio construction on at present?
Look, we've mentioned it many times, we are index agnostic, so we are really just looking for those best opportunities globally. For us at the moment, that means that we are overweight user pay assets relative to our utilities or essential services. And this comes about as we do believe we are in a global growth environment. It may be sluggish, but it is a growth environment, and that does favour the user pay assets. We're also overweight Europe and emerging markets and underweight North America. Now, partly this is a value call, but it also plays into a number of themes that we're looking at, and that includes the fact that there are more user pay assets in those regions of the world. There is also, we're playing into a theme of the middle class, the emergence of the middle class, which really favours our emerging market exposure, particularly in emerging Asia. And we're looking at some recovery themes in terms of both a macro outlook in terms of our European exposure, and Spain's a great example there, which is one of our bigger overweight countries, but also somewhere like Brazil, where we're seeing a recovery from a political and also a macro macro bottoming earlier this year. So there's sort of thematics that we're looking at, and that's the sort of exposure we have, which is sort of overweight user pay, overweight Europe and emerging markets, and underweight US and utilities.
There seems to be a lot going on, obviously, in the portfolio, but from a guidelines point of view, what are the key portfolio guidelines of the investment?
Yeah, look, we do have guidelines, and I think some of them are basically around just ensuring that we offer our investors a diverse portfolio in terms of both regional and sector exposure. So we have regional, we have sector guidelines, and we also have single stock limits of 7% of the portfolio. So they are pretty broad-based guidelines, but we're ensuring that we are providing the proper diversity in terms of sector and regional exposure.